Well, welcome back once again, Maverick Traders. It is Joe with you here. We are going to continue our series of candlestick patterns with the three black crows today. So let's just jump right into it. As always, the first thing we like to do is get onto the Bulkowski website and get some statistics and some probabilities in this pattern just as a whole. So theoretical performance for the three black crows is a bearish reversal. I'm going to come out and tell you guys that you can do this in more than just a reversal signal. In fact, we're going to go out on our example with continuations as well. So tested performance, the bearish reversal, 78% of the time. I'm going to elaborate on that a little bit more. If you guys have been following me with the series, we did do the three white soldiers. Whenever you get a series of candles in the same direction, to get that extra candle out is a higher probability than most. So 78% of the time, this will get one more of those black crows or one more bearish candle. Now that doesn't mean that it's always going to stay bearish, and I'll talk about that in 1 second. Frequency rank is 60 out of 103. They're rare. They're more on the rare side because to establish these candlesticks, you do need, to establish this pattern, you do need 3 candlesticks. So they're not going to be as frequent as, say, a doji or a hammer or shooting star. So continuing along, the overall performance rank is 3. Now, whoa, that's amazing, right? That's the highest we've done so far in this series, and it's one of the higher ones that I've seen Bulkowski talk about. I'll explain that to you in a while, and it's because of the overall 10-day move. So the best percentage, meaning the price target, is 36%. This is a bear market, and it's an up breakout, right? This is supposed to be a corrective move or a bearish move, but it looks like the up breakout meets its target the majority of the time. Now, or I should say more often than not. Now, 36% is not that much. And why is that? Well, it's the overall pattern of the candlestick added to the top or the bottom of its pattern. So when we've got 3 black crows, 3 candlesticks moving lower, we have to have 3 candlesticks moving past that to the downside to meet the target. And that's how Bulkowski uses targets. So you can see it's kind of rare. 36% of the time that happens. Now this is what I think gives it the overall performance rank of 3 because its best average move in 10 days is over 13%. But the funny thing is that 13% is in a bear market to the upside. So even though this is a retracement or a reversal signal, when this reversal signal fails, meaning it goes back up above the pattern, it seems to do a lot better percentage-wise. So Bulkowski just sees it as, hey, I don't care about uptrend, downtrend, good market, bad market, bear market, bull market, doesn't matter. How does this move or how does this perform after I see this pattern? And that's why it gets a performance rank of 2. Yes, folks, the highest, second highest, which leads me to believe I'm interested to see what's number 1. Regardless, we'll get there. Now, what is the pattern supposed to look like? This is what it's supposed to look like. This is where it becomes a retracement pattern. You get some bullish candles moving up to the upside here. You could see a little bit of a gap up. That's why I decided to use a candlestick that did not have a shadow. I thought it would be kind of fun to see that, hey, this is where it closed, and then it gapped up, and then it starts to come back down. Now, just like the 3 white soldiers, and I apologize for you guys who haven't watched the 3 white soldiers, you should, these bodies have to be on top of each other, meaning we need to see, in this case, the open of these candlesticks be somewhere in the previous candle's body, and I'll just draw that. So right through here and right through here, you can see it's nice and deep on this one, right? So we've got a situation to where each one of these candlesticks is moving lower, but it's not from previous day's close. And what I mean by that, well, you guys can see over here, I tried to draw these as straight as I could. This is a close. Let me just, I should actually draw that as a C. And here's the open. So this will be the close. And this is the open. Notice they're in the same level. And this is exactly what you expect the markets to do. It closes at, let's take a look at this example here, $96, and it opens at $96. So here's the close. Here's the open. Now, if we go over here, you could see that here is the close, and this is the open. So it did drop substantially, but it's within the previous day's body. That is what creates the 3 black crows, also the 3 white soldiers, for you guys that are curious. Now, the overall range, or I should say the expected target of this, is going to be the complete pattern. So let me just draw that. So it is this area here. So this whole box is going to be the expected target, either to the downside if it continues, if it breaks this level here, or if it's going to come all the way back up and break above this level, then it needs to exceed this box or this range here. I'll just draw it again to the upside. So that you can see that it's going to be pretty hard for these things to reach their target. Why I'm here, let me go ahead and erase this, because you can also see that because this triggers 78% of the time, it's pretty easy to do. All it has to do is close below this last candle's low, and that becomes a trigger. Excuse my amazing candlestick I just drew there. But that's it. That is a trigger. So this will trigger 78% of the time. You guys can see that, hey, look, the motion of the ocean is already going that way. Price action is always falling. So for us to get a candlestick like that should be pretty easy to do. But sustainability, meaning continuing on to the downside, it only reaches its target 36% of the time. So great reversal pattern. However, biting off too much is not going to be beneficial, but we could use it as identification of change. So let's break it down to the best setup conditions, and according to what this is supposed to be for. I went ahead and said, look, uptrending or downtrending chart, where the three black crows come will really dictate my next move. Meaning if it's at the bottom of a move to the downside, it's exhaustion to me, which means it could flip and we could get that 13% move back to the upside. However, if it's at the top of an up move after a bullish move higher, then I would expect price correction to the downside, and I would target something a little bit more bearish. So once I found that I could target a little bit more bearish, the confirmation is going to be below the third candle's low in that series. Lower level of frequency, these are very difficult to find, or they're rare to find. I know it's only 60 out of 103, but folks, when I was looking through my examples, it took me quite a while to find them. Lower level of frequency, but it does have high performance. Now keep in mind that that high performance is two different things. I took that 78% of the time that it triggers to the downside as, hey, this is a really good opportunity to have a target to the bear side. Maybe not the full target of the range of the candlestick pattern itself, but maybe a price target, or a little bit more of a, just a little bit more of a move to the downside. The other side of that coin is if these fail, if it turns around and breaks above the three candles patterns high, we do have the probability or possibility of a 13% move to the upside on average. So it just depends on where you play it. Now that being said, guys, let's go out to my examples because they were hard to find and they're going to be in different situations. So here is our first example. Let me go ahead and move along. You can see that we are in a pattern that is kind of consolidated. It came up in this range here, and since then, let me see if I can draw another box here, has kind of just been basing, and it looks like it's starting to break. I'll get my pin out and get a little bit more specific because we just came off of a pivot. Now, if this is indeed a move to the downside, this would be a great candidate for a three black crows to appear here, here, and here, right? Expecting us to move higher. Now, if that doesn't happen, then we can have the three black crows somewhere down in this area, which would show exhaustion or extension, which would also be a good candidate to reverse. So I know that I gave you guys the example of bullish moves up, a bullish move or bullish candlesticks before we get the three black crows. It can happen at the bottom of moves as well. That is Maverick's spin on things. You're welcome. All right, so let's see what this thing's going to give us in the next few candlesticks. All right, we're moving a little higher. It's not working out. Okay, I would like to see some crows here. Not getting them. And let's move a little bit further down the road here. Ooh, that looks like three black crows right there, doesn't it? Let's take a look at this. So, I'll show you what I'm talking about. This is what I like to do. I like to zoom in on it, but we do have three black crows. Now, technically, Each one of these candlesticks is within a body of the previous. Is that right? That's pretty close. This one definitely is. We could make the argument that that is one there. Now, confirmation would be a close above this to the upside, or continuation of a close to the downside. Now, based on the trend that I'm seeing here, guys, I would expect that remember, 78% of the time it will do this. I'd expect that it would be pretty easy for this to confirm. Now, if it doesn't confirm, then we got to focus a little bit more on it failing. That's what's so cool about the pattern by itself. So let's go a couple of more days and see what happens. Actually, we need to do 10 days, don't we? So let's go ahead and do 10 days. There's one. Wow. Now that first day, it completely flipped around and confirmed what? It confirmed that it did close above the range's high. So at this point, we've got that. Now, it wasn't the 78% probability or 70-something percent probability of it going down, but it did confirm to the upside. Now, these upsides, we could expect quite a big run according to what Bulkowski was pulling. So let's go ahead and add 9 more days. That's 1, 2, 3, 4, 5, 6, 7, 8, 9. All right, so now we've got our 10-day move past the pattern. So the first thing I'll do is I'll reiterate the pattern, and then here is our 10-day move past. Okay. Now we can easily see that we did exceed the initial target, which would be about this box higher, which let's go ahead and try to see if we can draw one right about there. Look at that. Isn't that funny? So it came right in line with its target, happened to be a little bit of a resistance area. A couple days later, we're back up here. So this would be a really good reversal signal, but to the upside. Since it's on the bottom of a downtrend, our expectations are for it to move higher. All right, pretty cool first example. Now with this next example, it's going to be pretty similar to the first, as it looks like we are slightly downtrending here. So let's see if we get the black crows at an extension below a support level, or if indeed we get it up at a resistance moving lower from there. I guess the only thing we can do now, folks, is just kind of move ahead and see where we end up. So let's go a couple of days down or over, a little bit lower. Oh, it looks like it's dropping. So are we getting an extension? There's my black crows that I found. This is another situation of an extension. What do I mean by that? Well, check it out, folks. I found our pattern. Here is our pattern. There's our black crows. And what I mean by extension is there's a support level right through here that broke. This is called the descending triangle pattern. That's right. We're getting a little bit more into just candlesticks, aren't we? Getting into support resistance levels. My expectations, and based on the last example and Bulkowski's results with that 13% gain, is I would kind of want this to get above here and trigger to the upside. Now that doesn't mean it has to, because remember, it can also get below this candlestick and trigger to the downside. So let's see what happens first and where we go in the next 10 days. So I'm just going to hold it out to see. I'm going to go all 10 days. Let's go all 10 days and see where we're at. Oh wow, there's 1, 2, 3, 4, 5, 6, 7, 9, 10. Now this really didn't give us too much of a chance to get into this, because it looks like this chart gapped up pretty intense. This was our entry point, remember, right? It's got to be the high or the low of the candlestick pattern itself, and it definitely exceeded that. And this was also one of those exhaustions or moves to the downside that this triggered. So in this situation with the black crows, it was obviously a move back up to the upside. Now, with that being said, let's see if I can't get into some sort of targets. It's going to be obvious that it did exceed its range, which means it easily hit its target. Here's that, and then let me box the last 10 days, and you guys can see that it had no problem fitting at least one of those boxes, I would imagine, up to here. All right, great. So that's its target, is this empty box, and it definitely exceeded that. Bulkowski was very excited this and gave it a very high rank of 2 because of the fact that when these do move up, he was seeing the best 10-day performance on average was 13%. And you could see that, yeah, this one actually completely supported that theory. Okay, let's take a look at one more. Now, as I built this last example, it was interesting because I took a look over here and you guys could see that, oh, that looks like 3 black crows. And it almost is, except for, and I threw this out because of it, is this and this are not within the bodies of one another, right? Remember that. We need more of this behavior. And we didn't get it. So I went ahead and just threw it aside for you guys that are paying attention. So, with that being said, let's take a look at the example that I did use. So I'm going to go a little bit further down. And what I liked about this example, let me get to it. 1, 2, 3. Is it's the first one that we've had that is actually coming from an uptrend. Taking a look at what I've boxed here, this is an uptrend. I'll go ahead and draw it across some lines if you guys like these trend lines here. Look at that. So we've got ourselves an up channel, and we have our 3 black crows pulling down from maybe not bullish candles all because there's a little red one there, but a bullish move upward. All right. Okay. Now we've got something to kind of correlate with what the black crows is supposed to be, which is a bearish reversal. That being said, let me put the box back up because I want to make sure we draw some detail before we move forward. This is the range of the pattern. This would be entry to the downside, which is supposed to happen 78% of the time. What we've seen in the last couple of examples is a break to the upside, meaning it's failed, and we could see an extension well above that. So let's see what happens in the next 10 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. And this one actually worked out. It worked out in a few different ways. 36% of the time, these will hit their target. We know that when these fail and break to the upside, boy, they break it pretty easy. But the downside, let's see. I'm going to try to draw this box as equal as I can to the previous. Yeah, definitely. We definitely exceeded the target. And boy, based on this movement here, back down to the support level, quite a bit further, right? So this is where we ended on the 10-day trade itself. Now, it doesn't necessarily mean, going back to what Maverick does here, that you're going to wait for this full 10 days. You might have a target basically in this range. Once it exceeds its target, like Bulkowski uses, you're out. So this previous support, this area, you could have cut it on this day, this day. It just depends on your outlook and what you want to do. But in this situation, let's go ahead and erase everything. You can see that it actually worked out the way we thought it would. Here is that pattern. Here is the trigger, which happens 78% of the time. And based on where your target was, it ended up working out pretty good. It really is just where you want to use it and how you want to use it when it comes to your outlook and the top-down approach with Maverick. So let's do a recap, and I'll cut you loose. So what did we learn today? Well, I learned something. This was the highest ranking pattern that I've done in the Bulkowski series of candlesticks with you guys. Pattern frequency is still 60. It's lower level, but higher performance with a 3, which is super, super high. It was hard for me to find these, just like the 3 white soldiers. It's the more candles involved in a pattern, the harder it is to find. Pattern rank is high at 2 out of 103. That's based on the percentage move after the pattern. This case, what made Bulkowski so excited was that 13%, higher than 13% move at once this fails, so he gave a super high rank of success. Tested performance is 78% of the time. It actually moves to the bear side. That doesn't mean that it can't trigger, turn around and fail. It just depends on how you guys want to use that. Can be used in bearish or bullish trends. We did have our first 2 examples were on bearish extensions, meaning that we had already rolled over from a previously high pivot point, and it was continuation move, and they both worked out really, really well. The first one was a complete reversal that really took off on us. The other one had some extension to the downside. So yes, you can use it in a bearish move, a bullish move. I don't really want to pigeonhole you guys into one type of trend. Now make sure that you have a plan before you trade these. Taking these numbers into consideration can really help when you come across them. So thank you guys so much for joining me, and we'll talk to you next time. Bye, everybody.